You know, you never want to disappoint your parents. That's not who I am. When I came time to make my college choices, you know, I went to Michigan State instead of University of Michigan. The first day I got there at school, I was already in the computer lab on MSN Money researching how to trade stocks. Yo! What's going on, my friends? How are you guys? Good evening. Hope everybody is having a wonderful day. I want to talk to you a little bit about when markets kind of reverse. So we've been in like this epic bull market, right? And we've been really having just like a huge run in pretty much the NASDAQ for the last, like, say, few months, right? And so the trading has been really easy because when the market goes up every day, pretty much everything works. Like, it's just easy trading, you know, like, you know, you just got to go long. You don't have to check the market at all, like intraday, meaning, you know, when you're having a list of stocks, you know, like I have this list of stocks, are you also having to check the intraday charts for the S&P, right, which is the S&P 500, which is your major index, or your NASDAQ? So like your NASDAQ is like your tech heavy index, and the NASDAQ is kind of taken over as probably the more important index because the NASDAQ represents tech. What does tech represent to us? The biggest, most innovative, baddest ass companies that America has ever made, right? Your Google, your Apple, your Facebook in, your MySpace in, right? Your Snappy Chats, all that kind of stuff, right? America has become not a manufacturing place anymore, right? We don't necessarily have factories and old industry like the Rockefellers. We're known for building out the best technology companies, and then of course having you know, the best TV probably, right? Those are the things that we're known for. So when we're trading, you don't have to necessarily watch all that if the market is like just in that big uptrend like we were talking about. But what happens is, you know, when the markets reverse and at some point these kind of trends are broken, and you know, you can see like your moving averages are starting to point down, and there's so many signs. Like when you think about trend reversals, it's, you know, your series of higher highs has ended, your moving averages have curled down, you start breaking levels of support on your charts for your indexes, but also for individual stocks, right? You want to be watching market leaders, right? Your Netflix, your Googles, your Apples, things that control the index, to figure out what the underlying buzz, the underlying sentiment is of what's going down. And then what starts to happen, like today, I thought that the market was going to bounce. You know, we had a nice, we had a little bit of a green day yesterday, but there were a lot of stocks that were running yesterday. So I was anticipating a bounce. As right now in the markets, what's happened in the last few years is once you dip down a couple days, you typically bounce, right? We don't have really big, long pullbacks. So I came in to the day with, you know, mostly longs. And so right out of the gate, like, I took this trade in Huya, and I got fucking smoked out on these things. Not smoked out, but I lost like $1,000. I was down $1,000 at the open, and I tried, you know, I used my quintessential, you know, ORB pattern that we talk about so often. You know, I took these trades, you know, and I was trading them at the open, and you know, they just started to roll over right off the bat. You know, like I had see this one candle, 2 candle, 3 candles. So I was taking this for the ORB. And right there, just no follow through, and these things started to roll over. Now, I had no borrows in this for some reason today, or I would have shredded this short hardcore. But what happens is when the market starts to get shredded like that, what you can do is use like ETFs, inverse ETFs, to trade the volatility and the action of the markets. And so I made $2,800 on this TVIX today. And using just some simple, pretty much simple strategies. So TVIX goes up when the market comes down. So like if you're looking at the QQQ, you know, it'll literally work kind of in inverse. So you can see like the QQQ bust down, right? And then you got bear flag, and then right, you got flat bottom breakdown, and so on and so forth. So but the thing is, you don't want to trade or short the QQQ because the damn thing moved 1%, right? We're not in the game for 1%ers. You know, if that was the case, we could just trade the futures contracts in the QQQ. So what I want to do is use TVIX, right? TVIX is something that really exploded a couple days ago. We nailed it this day too. It ran from 45 to 60. Guys, you guys sometimes, you know, you check us out in our chat room. You know, we nailed it this day too. Big range. I mean, even if you're trading 100 shares this right, you could probably make $1,000, you know, if you trade it right. So I had this on my list because I know when the market falls, this one goes. So if you look at the QQQ, just turn it upside down, right? See how right? See that pattern right there? And then now look at TVIX. It's just that in inverse. See that? And then that, and then the flat top breakout. So what we did was a couple different patterns that are really, really good. So once this thing started to ramp, see that right here? I can't chase this, right? You chase, you die in trading. You chase, you die. You chase, you believe in unicorns. So we don't like chasing unless we're really winning, right? You don't mind chasing if you won on the trade, right? It's when you lose, you're like, ugh, I've chased, and it hurts. So we don't chase. We don't like doing that. So I don't need much basing to really get into it. So as this thing cruises up, right? As this thing is cruising up, so man, it makes a nice move, 48 to 51. Boom. As soon as it taps back into VWAP, remember that we use VWAP in the middle of the day. That's like my middle of the day kind of trade, right? So I use VWAP in the middle of the day. So boom, as soon as this thing taps VWAP and holds, I'm in this thing, right? So I'm in this thing. Usually I was doing like 200 shares, 300 shares, 400 shares, kind of, you know, depending on the risk on the trade. So we take this thing in and we shred this thing to the upside, grab a couple bucks out of it. As always, if I get 50 cents or $1 or $1.50, I'm going to scale out of some $1.50, a third of my shares or half my shares, and then I'll rejigger the trade and get back in when it settles in. So, you know, I'm selling out into this thing, and then what we essentially do is we're just buying time. So this is where trading gets interesting. You've got to sometimes take shots that may not work. In any given day, even if I make $2,000, $3,000 on a particular stock, I may take a few losses on it throughout the day. So like this one worked, right? But then as this thing came back, when it was holding at its 20 EMA right here, see this right here? As it remounted the 9, I got back into this thing because I saw, you know, the trend line break and it broke back over the 9. And so I got in this thing at like 51.70. And then, dude, I sold the lows, like literally. Oh, shit, where'd it go? Sold the low. So like as soon as it broke back under the 20, and see how like it got back under this last low too. I should have gave it maybe a little bit more room, but I didn't want to give it down to like here an extra 50 cents. Instead of an extra couple $100 risk. So like I got stopped out of this thing. Can you fucking believe that? Sorry for the swearing. And the thing is, you know, I was telling my guys, right? It's like you sell lows, use the hose. And you know, today that was me. So yeah, I ended up selling it and I lost some because it was like I got 51.75. Yeah, I sold a little bit right at 51, lost 75 cents. You know, you have 300, 400 shares, you lose a few $100. But then you can see the next candle. So this is where you guys got to be on the fucking attack all the time, right? A lot of people, like they take a small little loss on the trade and it's like, oh, like I'm grading my students' trades right now. Somebody just sent me their trade journal and it's like, you know, he took like a really couple small losses on a trade and then the trade ended up going, exploded. I said, dude, why'd you get back in this thing? He's like, well, you know, it's like I already lost on it. And it's like, so what, right? Some will, some won't. So what, right? We want to get back in. We've got to be on the hunt all the time. Like, yeah, we take a small loss. So what? If if the pattern breaks again, it just adds more confirmation. It makes the pattern tighter. It makes the pattern better. And that's when we want to go with this thing. And so as it broke again, just hit it again, right? No big deal. And now we're really off to the races. And now I've got a really clean trend line break, right? You've got yourself a nice kind of flag pattern right there. And then boom, this thing was right off to the races. And, we were in this thing again. And then, lo and behold, a little bit later, I actually tried this thing again as it broke right here. And, it busted down. I sold it for a loss. I had 200 shares here. And it was getting late in the day. I'm thinking maybe it's not going to work. But once again, I was a little bit too tight with this. I sold it as it broke under the 20 EMA, but it was just too tight. I was trying to protect my profits because I was, up $1,500. And then, you can see later on, this thing did bust loose. And so I did hit it when it broke the trend line and the 9 EMA was right up under it. I ripped a couple bucks on it. It ran to, about $60. I hit it about 56, 55. So, it ran a solid $2 and some change. So I ripped a few hundred more dollars on it and then, sold it and came back down. But a moral of the story is you can use something like this when the market throws you a surprise. The market is going to always throw us curveballs. I prepare and I look at, say, 1,000 charts in a day. Nobody prepares harder than me, right? It's 10:49 right now. I'm here making videos and I'm feeling just as jiggy as I did. Do people still say that? As I did at 6 a.m. when I was talking to my students that live over in Europe, right? Still just as jiggy if people still say that. But moral of the story is I had made this huge watch list. Look at how damn long my watch list was. I had stocks on my watch list, right? I had stocks on my watch list. But my whole watch list went to shit. Everything was tanking, right? And I could have reversed some of these trades. But rather than being, I always keep a couple things that I do like for shorts. But rather than kind of playing that kind of pity-patty game, you can use something like a TVIX always in your back pocket to say, you know what? Market reverses, I can go with this one. Now, this is the thing, guys, all right? Remember this. TVIX is one of those instruments. It's a declining instrument. Because it has leverage to it, it typically just goes to zero over time. You can see this thing used to be, right? It just goes down every day pretty much forever. The only times it ever works is for a few days when the market rolls over. But other than that, it just bleeds out. And then what they do is reverse split it to kind of get the price higher. And then it just bleeds out. So you never want to hold this thing overnight, stuff like that. It gaps all over the place and you can really get smoked out. I find the these kind of leverage ETFs, this is a 2x leverage, can be tricky for new traders. Even somebody like me, I trade 200 shares, 300 shares of this thing. You don't go 1,000 shares, something like that because, it can be all over the place. And I never hold it overnight. So guys, I hope that helps. This is something we talk about in our trading boot camp, our 60-day boot camp. And also, come in and join us in the chat room. I'm on video and we're hooting and hollering. I'm trading live. And you know what? I'm pretty damn good. I like trading in front of people. And we have a great time and a great group of guys. And, sometimes we run free chat days and stuff too. I'm making a new kind of hot chat room that's going to be super next level. So once it's done, maybe I'll run out a couple free chat days or something like that because my new chat room is going to have scanners and charting and everything built into it. So it's really going to be a cool technology platform. So I hope that helps. As always, I appreciate the feedback. Subscribe or like or do whatever all these geeks tell you to do on their YouTube videos. Subscribe if it's here. Subscribe if it's there, right? Now I'm just messing. But let me know what your thoughts are. And I really take it to heart. So I'll make sure to answer your comments. And always feel free. If you want to email me, it's, canal00@gmail.com. I love hearing from people. I chat all day. I go for a walk every day, usually on the beach, and I'm always just answering back emails and stuff like that. If my punctuation seems a little bit crazy, it's because I usually do the voice to text. So, don't think that, I've got bad grammar. I mean, I do, but you know how it goes. So love you guys. Take care.